Yeah, I mean, Stanley Druckenmiller is a billionaire hedge fund. Now he runs a private office. He's one of the best voices that you can listen to, in my opinion, especially from the macro level. I mean, he does tremendous work and makes great returns. Obviously he's a billionaire. But the couple of big ticket items he talked about, which we'll get to inflation in a minute, but you often refer to the gold bugs and how you can't be a diehard one way or other. You got to be able to change your mind when the facts change. Stanley Druckenmiller, to his point, is as humble as you could be if you're a billionaire. At least he comes across like that on TV. Because he came out and said during this interview, and it's about 10 minutes long. Well, there's different segments of it. But I encourage you guys, go to CNBC, check this out, because he starts off and says, hey, I was dead wrong. I came on and I said a V-shaped recovery in the stock market was not going to happen. He outlined a couple other predictions that did come true, but he came out and said, hey, I was wrong about this. But getting to the gold bugging thing, he's talking about, and the big headlines are one, crypto, and two, he thinks that the Federal or the U.S. currency could lose its world status, meaning that it won't be the currency of choice. Right now, it's the reserve currency for the world, and he gave some good talking points about that. Frank, what stood out to you out of that interview? Because I'll get more into that, but what about you?
That's a big statement. That's a big statement, because Druckenmiller has sounded the alarm in the Fed. He did in 2018-19, I believe, and had articles saying, this is getting a little crazy. And then we had COVID, right? So we understand. I think all of us agree, if you're going to stop people from working locked down, you have to give them something, right? So we all got that. That's over. Maybe it comes back. Maybe we get a different stream. Right now, that's over. That risk is dying down tremendously, right? You accomplish it. You created inflation. I mean, you look at the unemployment rate, and you're going to say, well, we need more jobs. You don't have jobs because you're handing people free money. But for Druckenmiller, just, showing the facts that foreigners continue to be net sellers of U.S. debt, which is very, very rare. They could lose, the reserve currency status in 15 years. And I said it wouldn't happen in our generation. If the Fed keeps this current pace of what they're doing, just flooding the markets with money, we're going to see runaway inflation. There's no way to control that. That's what's scary. I think people don't understand. It's not you could throw money at it and you could no. The only way is you got to force a recession, right? You got to do exactly the opposite of what you're doing now. You got to sell bonds. You got to take away the punch bowl. No more stimulus for people. Rates go higher. It's going to be less people spending money. You're not going to have pricing power. Prices are going to come low. That's how you control inflation. We've never been in that environment since the 80s, and he's sounding the alarm here, and I agree with him. I've been saying this for probably a month and a half now, and coming from him and coming from Jeffrey Gundlach, just the reserve currency thing was the biggest deal. Like for 15 years, if you really, really believe that, I'm glad he threw that out there, because I didn't even want to go that far. We need to go that far, because it's hard for me to believe, and we talk about this, Dan, you make fun of me, that the Fed does not see this. They don't understand what is going on. They were surprised that the unemployment rate went higher. They're surprised that they didn't add more jobs when you're giving people free checks. I don't understand. Yeah, I don't get it.
Yeah, Frank and I still disagree on whether it's done on purpose or not, so we'll save that for a different time. To his credit, Druckenmiller, he did say the 15-year thing, and he said he could change his mind depending on if the Fed changes policy. From an investor standpoint, it's always important to know why you own something. So what you ought to anticipate as an investor and be thinking about from a longer term standpoint is, he was talking about how basically $500 billion, I believe it was normally coming into the treasury market from foreign accounts as hedges, institutions, different things like that. When the coronavirus meltdown in the stock market happened, the bond market dropped as well, showing for the first time that treasuries weren't being used as a safe haven. So international money wasn't flooding in as a safeguard. That's a big deal. Now, it might be a one-off, it might not be, but anticipate interest rates moving higher. Forget about the Fed for a second, just based on the flow of money. And that's a big deal to pay attention to, because money is not evaporating, it's going to flow somewhere else. So that's where you want to look at in commodities and more inflationary things. The other big takeaway, Frank, is he thinks the dollar will be replaced by what?
He mentioned cryptocurrencies.
Well, he'll stop short of that. He didn't say Bitcoin. He didn't name anything, but he did say a group of guys from MIT or Stanford would come up with a ledger-based system. So, of course, if you're a crypto bull, man, you can take that and run with it, because now you got in addition to some other billionaires, Tudor Jones, he's a billionaire, right? I believe he's a billionaire.
Of course, yep.
Him and, the other, Mike, how you say Mike's last name?
Tepper?
No, the Grove.
Novogratz, yeah.
I always want to start with a G for whatever.
He was on CNBC. He was on CNBC this week, and it was great because Joe Kernan. I like Joe Kernan. I just wish he let the guests talk a little bit more, especially on Squawk Box, because you usually have great people on there. I'm a fan of Joe, but Joe is he was interviewing Novogratz and had a bad connection, and Novogratz had a bad connection. It was just like an echo and stuff. And at the end of it, he's like, you know what? You might want to sell just like one of those Bitcoins and get a new system. And Novogratz like, yeah, you're right. It was so funny because I was thinking the same thing. I'm like, this guy's worth so much money, and yet he has a system where you can't even hear him. I mean, just get a decent webcam, and it was just funny. But look, I agree with Druckenmiller, and you're going to see more people sound the alarm because the good news, the really good news, Daniel, is we see it. We know it's here. This isn't like a pandemic. You don't see it. If you don't see that risk in front of you, those black swan events, that's, just the whole banking system. People thought, subprime loan, it'll only be a little hit. They didn't know that these banks were leveraged 30, 40 to 1, and that they create synthetic loans, and which would destroy the entire system. We didn't really see that till later on. We see what the problem is. We see what's happening. We see what's going on. Hopefully the Fed does the right thing. And then when they do the right thing, it's going to be painful. We've been in an environment of easy everything for, since the credit crisis, right? And eventually we knew this was going to happen, right? We had inflation where it was controlled and everyone was surprised when they get inflated. We're coming from a very deflationary environment. It was different times. Now you threw trillions into the system. The pandemic is over. When you have people staying home, when you have chip shortages, you're seeing things for the first time that we've never seen. Plants closing because there's too much demand and they can't get enough out, so they're idling production. And some things that you never see before, you have to worry. But the good news is, usually when you see something in front of you, you're able to control it, you're able to stop it. The Fed can do something about it, and hopefully they do. So, that was the biggest takeaway I got from the story, but it was interesting.
Yeah, I mean, they can and they can't, because if they take the steps to negate inflation rising, you have to completely, the other thing so we got to get to Rick Santelli, but one more thing Druckenmiller said that was so brilliant and just so plain and simple is that the Fed and the government are, Senate and Congress and all that kind of stuff are supposedly independent. Now, they're really not, but that's okay. You cannot pass legislation and debt and spend at the rate you're spending from a political standpoint, and it doesn't matter Democrat or Republican, unless the Fed is being the middleman and manipulating rates and buying bonds and all that kind of stuff. So they're in a tight spot, because if they do what's right to fight off inflation, you're going to significantly stop and hinder all the policies that are being promised right now. So that's a big political divide, and that's going to continue. So from an investor standpoint, just keep that in the back of your head. Turning to inflation, and when they're not going to raise anything because they keep saying they're not worried about it, it's transitory. I know you joked about that being a key word. Rick Santelli said it best. The problem with the transitory deal is that they can move the goalpost. So if it doesn't go down next month, next quarter, or 6 months, they'll just say, well, transitory is 12-month period.
Yeah.
Why an 8-month period, 18-month period? And the scariest thing is, and this is where I believe it's still the lead story on CNBC with inflation, and everybody ought to watch, it's about a 4-minute video. But Rick Santelli says the problem with that is that if you're middle America and your food bill doubles, that hurts. From a Fed perspective, you look out a year, if it doubles and it stays there, then it's not growing year over year. And that's all they care about.
Yeah.
So in reality, you're facing higher prices and consistent higher prices, and the Fed's going to look at that and say, hey, we're doing a good job because it's flatlining, although it's at a much higher rate. So that's the nervousness takeaway, and you have to be able to decipher how they view things and how reality and how the stock market will come in. And like you said, we have not plenty of time, but it's coming, so you can prepare yourself now and invest along and according to.
Yeah, and Santelli has a problem. He just uses too much common sense. Yeah. It's not a good thing.
We need to get him on the podcast.
I probably can.
He needs to be on the podcast.
He's
that guy's great.
Yeah, I mean, just seeing him and all the economists on, and again, I've interviewed some of those economists who were on TV when the CPI number was released or the unemployment number was released, and just he was the only guy that knew what was going on, and it was amazing. And it was just, he's been that way for a long, long time. Just the common sense point where you have Steve Leisman couldn't even find the number, and again, I know Steve Leisman. I met him. He's a good guy. It's just seeing them so surprised at something that seems so obvious to any single person living in America that pays their bills, that goes to work. I mean, it's pretty easy to see it. Who goes out to eat at restaurants? We all see it. But just to see how flustered they were, I'm like, man, how don't they see it? And that's, my biggest fear. Does the Fed really think there's nothing going on? And you brought up a good point. Yeah, it's transitory. They're not saying why it's going to be brief, but they could extend those goalposts. You said it well, and Santelli said it well.